So this market saw a gut-wrenching fall. It appeared that the bull market was just about getting over. But less than 3 weeks, we're back to new highs. New high on the Nifty, Bank Nifty is almost there, and small and mid stocks have recouped almost 80% of their losses. So my question is, why did we fall? And after that, why did we recover?
So I think regulation change in terms of the fact that liquidity analysis report needs to be submitted on a monthly basis. That was the major reason. You would remember that in 2018, when there was a reclassification to large cap, mid cap, and small cap, and there was a capital gains tax that was introduced at that point in time. That time also we saw some not gut wrenching fall in the equity market. So I think this time around, when the first analysis of liquidity test happened, it didn't seem to be that big a problem from the entire mutual fund, and that's why you saw knee-jerk reaction and then a rise thereafter. I think this process is going to be on. Liquid mid caps are no longer going to be favored as far as the mutual fund industry is concerned. They would find place more in the alternate space, and liquid mid caps would come back into the reckoning. So I think these would be the primary reasons why we actually saw a fall. It was overdue in some sense that some segments of the market were frothy in the broader markets, and that led to a correction, sort of, you could say. But I would, in general, believe that the markets are not very expensive.
And what better time, Manish, than right now, right? Because that correction is also taken place already in the small and mid caps. There seems to be still opportunity going by the earnings trajectory that some of these companies are likely to post, and large caps, they've finally begun participating, including banks. So where is it that you're scouting for opportunities, or already have in the last month and a half?
I think markets in general, on the benchmark is not very expensive. It's 1150 on the Nifty in 2021. Nifty 50 is not very expensive at 19.5, 20 times. Now, come to the themes, I would believe that it's all about the investment theme going forward. It's all about the order book. You're not going to see the earnings come through just yet. It's going to be back-ended, and that is why near-term valuations look slightly expensive. Some of them are trading at FMCG valuations, so it's a pick and choose within that space. But I think it is all about your power sector. It is all about infra. It is about capital goods. It is about your, somewhat positive on pharma per se. But I think on a broad brush basis, banks per se are going to see earnings growth. So see, these are some of the themes which are going to be in the limelight. And within that, you got to pick within the broader markets as well as the large cap space. So that's how we are placed. It's an individual stock picking call, and within the overall broad themes that I just talked about.
One of your top holdings is actually Zomato. And right now it is the toast of the town. A year ago, it was on the butcher block. At the current market cap of almost 2 lakh crore, how would you value a company like Zomato?
So I don't want to talk about specific stocks, Nikon, but just about this holding that we have in the portfolio. Look, it's about what sort of EPS this company is going to clock in 2026. And I think broadly the street is working with 2.5, 3,000 crores worth of profits. I think it's likely to get surprised, more so on account of Blinkit. I mean, of course, food delivery is going to do its in terms of contribution margins and EBITDA margins, but I think it's going to surprise you on the Blinkit side. So that's the broad thesis. 3,000 crore of profits is what the street is working with. I think the numbers would surprise.
If you like this video, then like, share and subscribe to ET Now.